Okay, so just a quick disclaimer before we get started. I am not a CTA, which stands for Commodities Trading Advisor, meaning I can teach you the strategies, I can help you learn to analyze the charts, I can point out setups that I personally want to buy and sell, but the actual trading decision is going to be 100% up to you.
Hey everybody, Benny Allen here, top trader with the IM Mastery Academy, and today we're going to take a look at the Euro GBP sell signal that was called on a 4-hour time frame by the IM Mastery Academy Harmonic Scanner. It is looking like a really nice setup. It was also called on a 1-hour time frame as well, so there's some good confluence there. Now, before we get going, make sure that if you feel like you are getting something from the videos that I'm making, make sure that you subscribe to the YouTube channel. And make sure that you comment, like, and share the video. I really like to get the feedback. It helps me get better. And I want to make better and better videos in the future. So with that being said, let's take a look at this Euro GBP sell signal. The entry is at 88.47. Stop loss at 88.68. And the first take profit is at 87.92. So just like always, let's switch over to the Smart Trader, because we want to mark up our charts. We want to really get inside the head of the scanner, right? We want to figure out exactly what this algorithm is looking at in order to make this trade call. So let's do exactly that. All right, so now we are on the charts and we are ready to mark this up. So you can see as we squeeze our charts down, you've had a very strong move to the downside, followed by some consolidation, which often occurs after these strong impulse moves. And now you can see here lately that it is really starting to make a pretty strong move to the upside. So what we're going to do is always, after we squeeze down that chart and we see what our high and low is, we are going to drop that trend line, right? We're going to split this market into a buy and a sell zone overall. So you can see here that price has broken this trend line, right? It consolidated, and you can see it broke out to the upside. And you can see that once it broke that trend line, we are looking for that wave, right? And we're looking for that swing low and that swing high so we can plot that fib. So you can see right here, we have our first swing low, right? That 5-candle combination that we love to see. 2 candles to the left, 2 candles to the right that are higher than the center wick low, okay, to the downside. And then up here, you can see this first high was formed, and you got 2 candles to the left, 2 candles to the right that are lower than the center wick high. So this is where we are going to plot our fib, just like that. Now, if you're using another platform other than Smart Trader, you can just pull your fib just like this, okay? Now, these fibs here on Smart Trader have a combination of the retracement zones and the extension zones because we know that they correlate. There is a way that you can do that on TradingView. I do have a video on that. That I am definitely going to have to upload here soon. But typically what you get is you would get a Fibonacci retracement tool like this. And then you would run your extension tool like so. And then back down to the low. So from the low to the high and then back down to the low. And you would plot out your extensions like that if you were using another trading platform. But for right now, we're on Smart Trader, so we're going to use the Smart Fib. So let's take a look at this now. We are getting the signal call because we are at a perceived D extension. Now, just because we are at this D extension here at the 118 doesn't mean that we're going to automatically get a reversal. We want to wait for what? That 5-candle combination, that official high to form. All right. So, why is this the D extension? Because you've got an AB boundary, and then you look for your C, which is going to be your lowest point within your AB boundary on a retracement. So you can see that we clearly got an A6 retracement, okay? And we know that with an A6 retracement, we're expecting the correlation of a 118 D extension. Somewhere in this zone, we're expecting price to exhaust. We're expecting to get a new swing high, right? And we are then going to look for a trend line break and a reversal, because remember that Harmonic Scanner is going to give us those high probability reversal zones. So let's take a look at swing highs and swing lows, right? You had a swing low and a swing high that formed your AB boundary. Here is a swing low, right, that made it an official low within an AB boundary here. See, look, Here's your center wick low. Here's 2 candles to the left. Here's 2 candles to the right. That is an official low. So we know that anytime price wants to reverse, it's going to form these highs and these lows, what we call the swing highs and the swing lows. Those are also your foundation for support and resistance in the market. So now that this D extension has finished, right? So look, here we go. Same sequence. Repetition, the mother of all skill. Look, here is our A, our B, our C, lowest point within the AB boundary, and then our correlating D extension that was hit. Now, in order for us to start our next fib, we have a swing low. We need a swing high. We need 2 candles to the right that's going to form that's going to be lower than this one. If not, price is going to continue to push up and we need to wait. So a lot of times when newer traders use the scanner, they get in right at that entry and they wonder why they've got some drawdown, right? And their trade is in the negative. It's because you really want to be patient and wait for that high to form. And then you want to combine that with a trend line break. And I also like to use the stochastic RSI. So I want to make sure that that trade, in this case, is overbought. I've got a swing high that formed and a trend line break. So whatever other tools you might use, a moving average, crossover, all of that stuff is to help you with the point of entry and look for that price to reverse. Okay, but I like to keep it simple. I use my fibs, a trend line, and I read my candlestick formations, and I look at that stochastic RSI just for extra confluence. But it's really all about price action. So you can see here the D extension has been hit. You've got a wick off that 118, which is a level of what? Hidden resistance, right? In this case, this is structure right here as well. So if you're just trading structure, right, you've got price that hit a point of structure. Matter of fact, here's another swing high, right? 2 candles to the left, 2 candles to the right that formed this structure point, right? So when they talk about looking left on a chart, if you didn't have any fibs at all and you just wanted to trade structure, here is a good structure point for you, right? This would be a very strong level of structure. Okay, here, look, acted as resistance, right? Acted as resistance around this zone. So around this 118, 127 zone, now we're waiting for price to exhaust, and we would like to see it go the other way if that signal is going to hold off the scanner. Okay, so a couple nuggets there for you. I hope you learned a lot from that, because that really helps with the harmonic scanner, and it really forces you to be patient, right? Patience pays, as we always say. So now, once this new swing high that forms, okay, so say price goes up here like this. We get our candlesticks to form somewhere around here, all right? And we are then going to look for something like this to form with our candles, right? We need that high, and then 2 candles to the left, 2 candles to the right, okay? And then this might hold. This high right here might hold. We don't know, but this is all hypothetical, right? We like to try to project. So next thing we're gonna do is now we have an official swing high. Here's our swing low, right? So now our C becomes our new A because this fib is done. It hit the extension. We're just waiting on that high to form. Once we get that to form, look, our C becomes our new A. Our D becomes our new B, okay? And then we're looking for that C, this is what the scanner is calling, that B to C correction, okay? That B to C correction, because we're currently in an uptrend. So to go from B to C would be a what? On a sell would be we're trading the correction, not the continuation. The continuation would be a move to the upside. So we're looking for this C, and then if it's going to be a continuation trade, that D is going to be up here somewhere, right? Okay, based on how far it retraces. So then what we'll do, look, here it is right here, guys. Look, our C becomes our new A. Here's our new B, and bang. This is what the scanner is calling. This is what the patterns are for. The forex market especially does the same thing over and over again. It's a pattern-driven market. So that will be the trade setup. We will wait for price to break a trend line, right? Is what we want to wait for that price to then break a trend line, like so. Wait for this price to break a trend line. And once the trend line gets broken, then we're getting in that trade, right? So this is a hypothetical example. But this is what we're waiting for now. Once that D extension is hit, we're waiting for this to form. See, you could tell because look, the entry price on the scanner is called at 88.47, okay? Look at the confluence. Here's our entry price. 88.47 is our entry price. It's at 88.47. Okay. There's the entry price right in between this zone. Look, it forms right with structure and right with the Fibonacci extensions. Okay. Exhaustion point based on past history, right? The good thing is what you don't have to do the back testing. The algorithm is already built, right? It's already built based on past history. It's already built on Elliott wave. It's already built on the Fibonacci sequence, which is what is the foundation for all harmonic patterns. Okay, so you don't really have to worry about any of that. You just need to be patient and understand a few things. Okay, so our stop loss is at 88.688. So 88.688. So 88.688. Just like that. There's our stop loss, okay, which will be just above our perceived here, be high, okay? So it protects you, right? It protects you because we know that price sometimes can bounce, okay? Price sometimes can bounce off of a key fib level like this, make a very, very shallow retracement, okay? Say this 236, less than a 38.2, and it could do what? Continue to the upside and then come down, okay? Or continue to the upside on a continuation, right? So what we want to see, because this is calling the sales, we want to see a deeper correction. Once this high forms, we want to see a deeper correction to the downside and for it to start hitting our take profit levels. But do know that, hey, there are times when you get a shallow retracement and price might shoot up and hit your stop, come around this 118, 127 area, and then come for a deeper retracement. Or the momentum may be so strong that it just continues to the upside. A lot of times, if you get this very shallow retracement and then price blows past your stop, it usually will stall around a 118, 127, and the scanner will actually call it again. So it is a beautifully designed algorithm, which is why I really love to use it. It just makes my trade life easy. You just sit back and you wait on the setups to come in, and it stops you from overtrading. Use proper risk management. You don't have to, because sometimes you can look at the charts and everything looks like a great trade, right? You don't have to worry about that with the scanner, okay? You know that because it formed a harmonic pattern and is at an exhaustion point, it's a high probability chance that it's going to reverse, all right? So that's what that setup look like. This is what we're waiting on, right? We're waiting on that swing high to form, and then which will give us that new AB boundary, and then it'll start to drop to our take profit zone. So our first take profit is at 87.92, which from entry to TP1 is 55 pips, 86 pips to TP2, and 135 pips to TP3. Like we get these scanner signals all day on a regular basis, right? It also calls them on the 15. I like to trade on the 1 hour and the 4 hour signals only, because then from those signals, if I get a 1 hour signal, I can drop it down to the 15 for entry. 4 hour signal, I can even drop it down to the 1 hour. But if you get around, if I'm taking a 15-minute signal, then I got to drop it down to the 5. A little bit too much volatility there. Really don't like it as far as risk to reward ratios and things like that. So I tend to stick with the 1 hour and the 4 hour scans. So you can see here that this price, let me get these examples out. You can see here that this price is still moving. See, as long as this price is still moving up, we don't want to get in that trade. We want to wait for that high to form, and we want a trend line break. This is what we want to see right here. Here's past history showing you exactly what we want to see. This is what you want to see. You want to see this swing high, 2 candles to the left, 2 candles to the right. Then you want to see this trade break a trend line, right? You want to see this trade break a trend line and then continue to go south and blow past those take profit points. So let's put our TPs in. So 87.92 is our first TP. So 87.92, 87.92, 792, first TP, and then 87.61. So 87.61. 87.61 is there. 87.11. Just like that. Okay, so this is what we're waiting on to finish. Now, this fib in essence is done. It hit our D extension. Look, it's continuing up. So, for example, if you were taking this trade with the trend, okay, which is what I love to do a lot, right? I love this trade where I get this trend line break, forms a high, pulls back. I'm looking to enter. Okay, so if you would have taken that trade there with the going with the trend from your 8.6, from 8.6 to 118 is 150 pips. So a lot of times people try to figure out how we find these high risk to reward ratio trades, right? Where these 3-to-1s, 4-to-1s. This is how, right? Because we will put our stop right below this A here, okay? And then we look to enter all the time at our 618 area and around our 786 area, right? So our risk to reward on these trades is huge, right? When we get these trade setups like this, our stops below our A, and look at that. So you're looking at over like 150 pips or so in between, probably like 135 or 150 on this trade. If you're trading this C to D leg here, right? Remember what I mean by C to D is this A, B, C, D, right? But what the scanner sets you up with a lot of times is now I'm trading that reversal, and then I'm going to trade these ABCDs in the opposite direction because the market moves in waves. So it is a beautiful, beautiful, beautiful system. So now look, this is still staying, okay, above the trend line, right? So you can actually mark up because this is a strong momentum push almost straight up. So if you run these the right way like this, then the trend lines get pretty sharp. And trend lines are awesome because they do what? They can help you with your entry. They help you determine the momentum of the market, which you can see the momentum is strong to the upside, okay? And they help you with reversals, okay? So you can actually, because this is so steep, you can actually put one like that. Now, as this trade starts to lose momentum, this will start to level out, and then you'll get that trend line break, preferably once that high forms, and then we'll look to get in the trade. Now that's on a 4-hour time frame. So that's what we're looking at, ladies and gentlemen. This is why the Harmonic Scanner is so special, because it puts you in a great position. Like I said, you just need to learn just a few things, right, about the market, right? This is all price action and structure, right? And it's very, very good to learn that from the beginning as a new trader, because here there's no no moving average crossovers, none of those extra things for confluence, just simple price action and reading your candlesticks, right? Okay, so now say we wanted to, this is on a 4-hour time frame. Now if we want to say, okay, once this hits entry, if we want to see, hey, can I get a swing high to form earlier, we can drop it to the 1-hour time frame, because look, now that this candle is gonna most likely close higher than the previous. So if we're waiting on an official swing high to form, that's gonna be another 8 hours, right? Because these are 4-hour candlesticks, right? On a 4-hour chart, you're tracking buying and selling activity in the market 4 hours at a time, right? So the data is showing that, hey, for the last 4, 8, 12 hours, 16 hours, this has been a bullish market. The bulls have had control. So we still need to wait on that high to form. Now, if you want to get in earlier and see that swing high form earlier, then you just take it down to the next time frame, which is the 1 hour. So we're going to link all of these charts, these levels, to the lower time frame, to our 1 hour. Okay, you can link it to the 15, you can link it to the 5, right? But we're gonna go to the 1 hour, okay? And I don't want any confusion, so I'm gonna take these levels out from the example that we did, okay? So that's our 4-hour setup, and what we're doing is we're waiting now, okay, for that new high to form, okay? So a lot of times people say, oh, the scanner, it doesn't work because it repaints itself. Yeah, because the scanner is looking for that high. So now that you've got this candle that's higher than the previous, so it may originally started here, it's going to adjust itself. You want that to happen. You want that to happen, okay? If you understand how the Fibonacci sequence works, you want that to happen. So we're waiting for this swing high to form, get a new AB boundary, and then we're going to go to those levels. So right now, though, what the scanner does is it just takes one big fib, right? And it just drags it. And it just keeps dragging it, right? And you can see, look, it just keeps dragging it up, right? And it'll adjust as it goes, right? You want the algorithm to be working for you. You want it to be working for you. See that? You want it to be working for you. So you see this CD is going to become the new AB. See that there? See that there? See that sequence? So this is what's happening, right? So you got this leg here. See that? See that there? Your take profit levels, the way the scanner does it, your take profit levels are always going to be the 382, the 618, and the bottom 8 boundary of the new fib, right? Look at that for a second. Look at that. Isn't that beautiful? So here's our old ABCD. Now the scanner is calling for a new AB boundary. And the way it does it is it's going to pull it from here, right? Like this. Okay. It's going to give you that nice new sub fib, just like that. And you see how that's lining up? You see how that TP is lining up, right? Okay. Smart trader fibs running just a little bit different, where we're going to pull it from that low to this high, but it all comes out to being the same. So look, here it is here. Look. So it's all about the Fibonacci sequence. Now, if this continues to run higher, then it'll adjust itself and it'll adjust these take profits. You want that to happen. It doesn't mean that it's not accurate. It means that it's accurate, right? So, okay, enough about that. So let's take this down to the 1 hour time frame. Okay, so we've taken our levels down, and here we go. Here are our levels here. We can actually now run our trend line. So we'll come to a low point and we'll start to run our trend lines like so. Okay, like that. Extend it just like that. Right now, if you were doing this manually, right, without Smart Trader, then you do what? You just pull out your fib, your trend line. You start at the low, you expand it out, and you're looking for that touch like a tabletop. Bang, just about like that. And then you can run your inner trend line like this, right, from that second touch. And there's that touch right here, see? And then you now, oops, I run it like this, like that, you see. There's that touch, okay? And then now this is so steep straight up in the air that you would virtually, if you draw on this one, very, very steep. It just shows you the momentum of the market. And now it touches the bottom of that candle right there on the edge. And now we're waiting for that swing high to form, right? We're waiting on this swing high to form like this, okay? Maybe that's the high, maybe not. But if it pushes up, that's fine. Wait for that swing high to form like that, something like that. Then it'll give us, right, like this, something like that. And if that happens, then you'll get your break possibly, or it may go up, okay? The trend line may start to adjust itself, right? So if we see this like that, the high, okay? You might get that, and then price will start to come down, or, okay, you may get this trend line break here with this candle. Like so. And now here's my swing high. And now close of this candle, we're looking to get into the trade, and we're going to take it right all the way down to our take profit level, okay? Because then that'll be our official swing high. We look to take the trade like that. So I know this video was kind of long, but I had a lot of questions from my last training regarding exactly how the scanner works. Okay, so I just wanted to take my time and mark things up for you to try to give you a better idea of what you're looking for in regards to how the swing highs, swing lows play out, and how to use the trend lines, right? The counter trend lines to get into the trade and to see exactly how the Fibonacci sequence plays out as far as your take profit levels and forming that new AB boundary. So I hope this really helped. Again, make sure that you subscribe, make sure that you comment, like, and share. And as always, our mission is simple. We educate, we empower, and we enrich the lives of other people. Until the next time, God bless everybody. Happy trading.